I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Connect. China has been very much in focus over the last week after a range of stimulus measures were announced in order to shore up ailing equity market valuations. There may be some wider doubt creeping in as to the effectiveness of these policies, but the news was sufficient to drive a relatively quick 1,000-point gain in Hong Kong's Hang Seng index after its test of 15-month lows. The rally did run out of steam on Friday, but one-week vol advanced to 46.79% against 30.76% for 3 months. Natural gas remains an active trade, although last week's bumper draw on US inventories, the biggest seen in 3 years, failed to have any meaningful impact, despite being fractionally larger than expected. The contract is trading down around 30% from year-to-date highs, although an uncertain weather outlook was lending support heading into the weekend break. Nat Gas one-week vol stood at 63.14%, up from a 3-month reading of 61.13%. Initial hopes that Chinese policy changes could support demand for copper supported prices in the industrial metal, with the underlying advancing by around 3% over the course of the week. There was, however, some light selling seen going into the weekend break, but as the likely impact of Beijing's stimulus measures becomes better understood, further direction could be seen. One-week vol printed 16.69% against 16.4% on 3 months. And at the stock-specific level, it was Nokia that provided some of the most notable direction. Earnings from the Finnish telecoms company may have fallen short of expectations, but a more upbeat outlook, along with a share buyback program, proved sufficient to see the stock add as much as 10% on Thursday's trade. One-week vol for Nokia stood at 65.55% against 40.76% for 3 months.